Okay, so what kind of situation do we have at the moment from a USD ZAR perspective? Now, if we remember from our previous analysis on this pair, what did we say? We said, first of all, the market has created this very overextended move to the upside, and we want to see the market make a deeper retracement. In other words, make a move to the downside. Now, if we take our Fibonacci on this impulse, so basically from the low to the high of this impulse move to the upside, what we can notice? We can notice that the market hasn't retraced to the 0.382 yet, which is the first Fibonacci level that you expect the market to actually retrace to. So we still didn't have a proper retracement on this pair. What we also said in the previous analysis is that basically we had a market that was creating basically this double top, specifically a market that has created a candle like this. Now, when you see a market create a candle like this with a very long wick and closing red, or a very long wick to the upside closing green, you expect the next candle to fill in the wick. So basically everything was pointing for a move to the downside on USD ZAR as we outlined in our previous analysis. Now, what we can see is that at the moment the market has basically started the move to the downside that we wanted to see. And in fact, with students, we are already basically in this trade running risk free after the market provided a nice entry for us. And we have a pretty good risk to reward to the downside, with the first target being the 38.2 from a weekly perspective that we have just identified. Now, the reason for which the market went for a retracement exactly to this area here is because what we can see is that this is a very strong resistance area. In other words, a very strong supply basically a zone. Why? Because in this move to the upside, what we can see, there is one candle that is not related to the move, which is this red candle here. Now, at the moment we are running and we are risk-free on the position. Our stop is at break-even. Why? Because if the market, after this minor information, will want to make a move to the upside, we don't want to we don't want to have open risk on the position. So the worst thing that can happen is that we exit the trade break even, because there is definitely the possibility that after this information the market will make a move to the upside. But if that won't happen and the market will melt to the downside as it should, then we will be in a very high risk to reward trade to the downside, as you basically have seen. Now, how you can be looking for a position if you're not already in the short on USD ZAR? Well, that is what we will be speaking about in this analysis. So let's go and see the situation from a perspective. So what hedge funds are doing at the moment from a US dollar perspective. So let's go and get our data and basically see what we have from a US dollar perspective. So on the US dollar, what we can see is that with the last report, hedge funds have closed more or less the same amount of longs and shorts. So there is a lot of hedging going on here from a US dollar perspective. In fact, net positions more or less are remaining the same. Meaning what? Meaning that what will bring a change to the pricing of USD ZAR is actually the change in the strength of the ZAR. So from a technical perspective, everything is pushing to the downside. Now, there is one thing that we must notice. The market has this counter trend line at this area, and from the high we have a similar situation, meaning that basically the market is moving inside of this triangle formation. And that is another reason for which we are already risk-free, because if from here the market will make the move to the upside, we want to be out of the trade break-even. How we can be approaching this if you're not already in the trade is, if the market will break this basically counter trend line and go for a retest of it, then you can be monitoring on a lower time frame. For example, on the 4 hours, we always look for our trades on the 4 hour. We take the direction from the monthly, weekly, and daily, and then we have very strict entry rules from a 4 hour perspective. And if what you can be doing is basically monitoring price action on the retest of this daily trend line, if the market will manage to break it, for a possible shorting opportunity if the rules of your own strategy will be satisfied. Now, if you enjoyed this free analysis and education, make sure to drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.